Now, cross-border payments can snag on a number of issues. While big advances have been made in domestic payment systems, cross-border arrangements can be slow, expensive and unreliable.
The Bank for International Settlements Committee on Payments and Market Infrastructure has identified 5 focus areas to make cross-border payments faster, cheaper and more transparent.
Well, earlier we spoke to the chair of the CPMI's task force on cross-border payments, Victoria Cleland, who's also Executive Director for Banking Payments and Innovation at the Bank of England, and to Marc Bayle de Jessé, Chief Executive Officer of CLS. And I began by asking Victoria about why the goal of enhancing cross-border payments is so important at the moment.
I mean, cross-border payments are incredibly important. With a world where we're seeing more people moving, more goods and services, it's really important that the payments industry is able to keep up with this. There are absolutely enormous values involved. It's estimated that between 2017 and 2027, there'll be an increase of $100 trillion in cross-border payments, so taking it up to about $250 trillion. So it's an enormous amount of money flowing around, but it's also impacting on people's lives day by day. Estimates from the UN suggest that remittances account for about 30% of some countries' GDP. So if we can enhance cross-border payments, it's going to deliver widespread benefits to people and economies worldwide. It'll support trade, it'll promote financial inclusion and hopefully boost economies. And at a time when economies are trying their best to succeed in the wake of the COVID pandemic, I think it's even more important than ever that payments are there to help and not to hinder that progress.
Victoria, if we can stay with you a second, why does cross-border payments, why are they slower and more expensive than domestic payments?
There's certainly a number of challenges with cross-border payments, and you've picked up on 2 of the key ones. They are slower. It can sometimes take sort of 10 days for a transaction to go through. And as you say, they're more expensive. Again, 10 seems to be the magic number. Sometimes they can cost about 10 times more than a domestic payment. And those will have a real impact on individuals. And it's not just the speed and the cost, but also they're less transparent, so it's not always possible to know when the payments are going to arrive, and also they can be more difficult to make, so access to cross-border payments can be trickier. There are a number of different sort of underlying causes or frictions to this, and in particular, there are much longer transaction chains. So for money to move from, say, London to Vietnam, we did some work saying it might need to go through 16 different stops along the way, and you're then trying to look at different payment systems with different operating hours. You're looking at different checks for know your customer issues. You might be dealing with legacy technology. And so there are lots of what we're calling these frictions that are making it more expensive and more difficult to move cross-border payments. I should just say it's not all cross-border payments that are facing these challenges. We have seen some progress in recent years for around sort of Swift GPI, but the payments are still too slow and too costly, and this is something that we really need to change.
Marc, let me bring you into the conversation, because what we've heard from Victoria is the case for making improvements to the system, given that so much is at stake. So what are the key challenges to improve that system to make it more effective?
Yeah, so what we have learned in bringing new currencies into our PVP mechanism, payment versus payment mechanism for foreign exchange transaction, is that when onboarding a specific currency, you face typically 3 types of challenges. The legal challenges around the fact that all laws and rules about payments are driven by domestic considerations and not cross-border consideration. The regulatory context, compliance, similarly, which is focused on domestic challenges rather than cross-border challenges. And the last one, but not the least one, which is the operational context and the necessity to have common ways and technical ways to access system and process system. What is key in getting efficiency in cross-border payment is to get straight-through processing, as hinted just now by Victoria in her answer. And that's what you can get through use of standardized mechanisms.
Marc, how can the financial market infrastructures, such as CLS, contribute to the Financial Stability Board and CPMI work to improve cross-border payments?
Well, we have gained a certain experience, so mostly in the wholesale area, so where we are settling FX transactions with a payment versus payment mechanism, which is removing basically the settlement risk, which is at the heart of cross-border payment. It has been very well identified in the work of the CPMI as one of the core areas where we need to improve the global system. So when you pay in a currency and receive currencies in another area, you have no risk to lose the principle of your payment. And that is really at the heart of the experience we can bring. Similarly, thanks to the global nature of CLS, we have learned to deal with multi-jurisdictional context and bringing together, in particular, different central banks, different regulators to, again, align them and understand what are the cross-border challenges in a globalizing context. And that experience, we can share it with them.
Okay, and Victoria, when you look at the international landscape, what would you say has been done over the last year to enhance cross-border payments?
I mean, there have been a lot of changes taking place, and I think the point Marc made about harmonisation is an important one. And so we're already seeing the industry moving towards ISO 20022, so more harmonised messages. We're seeing movement around sort of in regional initiatives, for example, in Australia and the Pacific Islands, looking at remittance corridors. So there are lots of individual initiatives taking place. But I think what's really important is the work that was just alluded to in terms of the G20, making enhancing cross-border payments a key priority for 2020. And as part of this, it has enabled us to get much more global focus and momentum, and to be able to look at the whole range of issues and to look at them importantly from a sort of international perspective to get some of those benefits of harmonisation that Marc touched on. The work that the G20 is sort of championing at the moment started in April when the Financial Stability Board published a report which was an assessment of what are the issues and the challenges around cross-border payment. Then in July this year, the Committee of Payments for Market Infrastructure published a report of 19 building blocks saying these are the things that we think would make a real difference. And the finishing touches are being put literally at the moment to the third stage of the work, which is a roadmap, which is being led by the FSB, but working closely with CPMI and other standard setting bodies, really trying to say, okay, if these are the 19 building blocks, who needs to be taking them forward? What are the key initial actions? And so I think that this piece of work is really important because it's taking a very holistic view. It's not just saying we need to sort some issues around payment infrastructure, or another group saying it's an issue to do with know your customer or it's a regulatory issue. So I think the big change internationally this year is acknowledging it's a multi-dimensional issue that needs to be solved by multiple players, public, private sector, and internationally, and it's got the momentum. So I think that's the real change that's taking place.
Why is this especially important to enhancing cross-border payments? And from your perspective, what is the additional work that needs to be done in this area to make it more viable?
Yeah, no, it's a very good point. The payment versus payment mechanism, which is at the basis of what CLS is providing across the 18 currencies that we are settling for foreign exchange transaction, is basically removing the settlement risks from the processing of those transactions. So it is making sure that when you buy a currency against another one, you will get that currency at the end, or you will not lose your currency. So you are not at principal risk exposure anymore. And this is particularly critical in the context of cross-border payment, because often when you cross-border, you have geolocation somehow challenges. So you have time zone differences, which make that the processing of a payment, as just reminded by Victoria, can be at a certain time in a day in a country, which is at that time not available in the other country. And therefore, you need to make a link between the two parts of the payments to make sure that the processing has been done in a secure way without any risk to lose the money that you are sending away, basically, against the service or the money you are receiving in this case, when you have payment versus payment. Recently, the BIS has published its triennial survey showing that this risk is on the rise, in fact, because of globalization. and because of more currencies being settled in the world than the one for which we provide a service, in particular in CLS. And this is creating a challenge to make sure that we are able now to address the systemic implications from those payments that need to be processed with PVP mechanism in environment where the degree of regulatory, legal, and technical standardization and internalization is not as high as the one that we could take on board. For an example, to take on board a new currency, i.e. to make sure that the necessary standards are met, it takes 3-4 years, the time to adapt the local legislation, regulation, as I was mentioning, but also to adapt operational and technical context. We are just onboarding now, for instance, the Chilean pesos into our settlement function.
Okay.
Well, Marc and Victoria, thank you so much for your time. Sadly, time is not on our side, but we would love to speak to you further. Thank you so much for joining us on Sibos TV. Enjoy the next few days as well. That was Victoria Cleland, Chair of CPMI's Task Force on Cross-Border Payments, and Marc Bayle de Jessé, Chief Executive Officer of CLS.